Hi, this is James Show with Westpac London's end of day report for Monday, June the 17th. Well, equity markets were in pretty healthy form today with the rally that we saw in the afternoon session in Australia on Monday and in the other Asian markets continuing in Europe today, the main driver being a reassessment of the prospect that as early as this week with the Federal Reserve FOMC meeting on Wednesday, as early as this week we could see some hint that policy might be tapered in the US. That is, that the current $85 billion a month worth of asset purchases that the Fed's currently engaged in might be reduced. The speculation seems to be today that was premature, and because of that, it means that the wall of money will continue to support equity markets in investors' minds. So we saw in Europe a gain of 1/3% for the London market, and other European markets up 1% or more. And the Dow's up 1.1% at the New York lunchtime at 15,232. There was some economic news out today. We had quite a rebound in the New York Fed factory index for June. It rose from -1.4 to 7.8. Reversing a fair bit of the prior 3 months decline, but that was the headline. What was interesting is the detail in orders down 5 points to -6, shipments down 12 points to -12, and jobs were down from +6 to 0. In other words, firms are basically assessing that the general business environment is improving, but their own firm's performance seems to have deteriorated somewhat substantially. So a bit of a mix there in terms of the way you read that. It's worth noting that the ISM factory survey for May, which dipped below 50, indicating contraction, is kind of validated by that response. And given that the ISM is a composite of those sorts of component details, it could be that we're going to see a June reading for the ISM similarly soft to the May one, if that Fed regional survey is any guide. In contrast, the NAHB housing market index was up sharply. It rose from 44 to 52 in June. That's a new 7-year high for that index. So we had a lacklustre start to the year for the NAHB after decent gains through 2012. It basically pulled back a bit, stalled, but now it's resumed its 2012 rise, rising to a new high. That could be a sign that builders are seeing more demand for new housing. European exports were down 0.8% in April after rising through the first quarter. That's a bit of a concern given that we've got other indications such as the PMI surveys, which we get a June update on later this week, suggesting that the second quarter could be another one of contraction for the European economy. So they're the main news points. We've got the G8 meeting ongoing in Belfast. There's discussion going on there about a free trade agreement between Europe and the US. Right, so they're the main news stories. In terms of commodities today, we've got a bit of weakness in the gold price, down 0.4% at $1,382 an ounce. Copper's off 1/3%. Oil's up 0.2% at $98.05 a barrel. It actually was up a bit more earlier today, but it's pulled back somewhat as the US dollar has strengthened, and indeed the Aussie dollar has fallen quite a bit. It's down a cent since the London morning started, where it was at just under 96.5 when I got in at 7:30, and it's now at 95.4 US cents, so just over 1 cent loss in the Aussie dollar. We've got the Reserve Bank's minutes to the June meeting. They issued a pretty brief statement after the June meeting, so the minutes might provide a bit more guidance as to the thinking behind their on-hold decision at that meeting. That's it for today. I'll be back again same time tomorrow.